Thanks for joining us at xm.com. In this preview video, we'll be looking at the core PCE inflation report out on Friday and, of course, the outlook for the dollar. I'm Cristina Marujos. With me today is our investment analyst, Cristina Bartenidu. Cristina, core PCE inflation, the Fed's preferred inflation metric, is out on Friday. Expectations are for further moderation in yearly terms. Could that further enhance rate cut bets by the Fed in 2024?
Hi, Christina. That's right. November's core PCE inflation index is expected to slow down to 3.3% year on year from 3.5% previously. This is, of course, higher than the Fed's 2% target, but it's still a weaker number, suggesting that monetary tightening is working and driving inflation to the right direction. Inflation is in a downtrend, so that could be good news for the Fed. Therefore, perhaps the data could be a confirmation that no more rate hikes are needed in the coming months. Now, whether they will affect the current rate cut projections, well, I believe that unless there is a huge downside surprise in the data, there might be a moderate impact on the current rate cut projections. And that's because the Fed has already signaled three rate reductions for 2024, but futures markets believe that the central bank could deliver more than four. So if forecasts are right or come slightly weaker than expected, investors may not immediately adjust their rate cut projections. Besides, the CPI inflation figures have already informed traders about November's price tendencies, showing a softer annual growth of 3.1% year on year. The report will also reveal some information about personal income and consumption. Those might be interesting to watch, as they could shed some light about how consumers are reacting to higher interest rates. So, but again, I don't think that those may have a huge impact in the markets. We will also get the Philadelphia's Fed Manufacturing Index on Thursday. That may also share some important information again. But still, the latest manufacturing PMI figures have already gave some insights about the sector. Nevertheless, the data might be worthy to watch, especially the employment and new order sub-indices.
And now let's turn to the market reaction. How can we see the dollar perform on the release of the data?
Well, as I previously said, investors may not react intensely because they have already some idea about how prices and employment changed in November. So the information this week may not be new to traders, but overall it will be a busy week of US data releases, including home sales and initial jobless claims. So any big deviations from forecasts could move the US dollar, as investors are still trying to figure out whether the first rate cut will come as soon as in March. Investors are currently providing us around a 60% probability for a rate cut in March. So they probably need some updates, some clues about whether that could happen. So if the data come better than expected, suggesting that the US economy is still resilient and there is no need to rush, and there's no need for the central bank to cut interest rates as soon as in March, then the US dollar could extend its latest rebound. Otherwise, any bad news for the US economy could just pressure the US dollar.
Cristina, thanks so much. This was a preview video here at xm.com.